Welcome to the Opening Bell Report.
Okay, let's just look at the tape from Thursday, January 22nd, 2026. Because if you were watching the critical mineral space,
Yeah.
wow,
Yeah, it was something else.
you saw something that looked, less like a normal market day and more like a rocket launch. Critical metals core, CRML, it just surged over 20% in one day.
It was a massive move. We're talking about a jump from around $15.20 all the way up to $18.46 at the close. It even touched $20 during the day.
And, normally when you see a stock add that much value, you think buyout or a huge earnings beat.
But there are no earnings.
Exactly. This is a pre-revenue company.
Right.
So the market is essentially pricing in this whole new reality for CRML based on news, not actual cash flow.
Right.
And so the mission for this deep dive is to figure out, has the market just lost its mind? Or did the whole story for this company really fundamentally change overnight? Because we've got a stack of analysis reports here, and they're talking about a new venture in the Middle East, construction in the Arctic.
Yeah, and some pretty scary financial metrics if you care about things like liquidity.
It really is the ultimate tug of war, isn't it?
Yeah.
You have this huge geopolitical story on one side, breaking China's grip on rare earths. And on the other, you have a balance sheet that is just running on fumes.
That's the perfect way to put it.
So let's start with the catalyst.
Yeah.
What was the spark that really lit the fuse on Thursday?
The big news, the thing that drove the whole move, was an announcement out of Saudi Arabia.
Ah, the MOO.
Yep. CRML signed a memorandum of understanding with the Al-Qahtani Group, TQB.
Right. And the big headline is they're planning to build a rare earth processing and refining facility in the kingdom. My first reaction was, why? Why would you ship rocks all the way from Greenland to the desert?
It sounds counterintuitive, but the market sees a solution to the biggest problem in the entire industry. The midstream.
The processing part.
Exactly. See, digging the ore out of the ground, that's actually the easy part. The real bottleneck is refining it, separating all those 17 different elements from each other.
And China controls almost all of that, like 90%, right?
About 90%, yeah. So if you want to create a supply chain that's independent of China, you can't just open a new mine. You have to build a highly complex chemical plant.
Which is a permitting and environmental nightmare in the West. It takes years.
Years. And a fortune in energy costs. But Saudi Arabia offers a sort of fast track. You get cheap energy, which is a massive part of the cost, and a government that is actively trying to become a hub for this exact thing.
So CRML brings the rocks from Greenland. Saudi Arabia brings the money and the location. It's a strategic fit.
That's the idea. It's a supply chain marriage.
But let's play devil's advocate for a second. This is an MOU, a memorandum of understanding.
Right. Non-binding.
It's basically a handshake.
Yeah.
It's not a done deal. The market just added hundreds of millions of dollars in value based on a piece of paper that either side can walk away from tomorrow.
And that is the absolute core risk here. Investors are pricing this as if the factory is already built and running.
Okay, so let's assume the deal holds. For now. A factory is useless without feedstock. That brings us to the other major piece of news. Greenland.
The Tanbreeze project.
Which has been talked about for a long time. But the reports mentioned that earlier this week, there was actual movement on the ground.
Huge movement. CRML officially approved the start of construction for the Tanbreeze pilot plant.
And why is that so significant?
Because it moves the project from paper to dirt moving. For investors, that massively de-risks the asset. It shows that management is confident enough in their geology and their process to start spending real capital.
And Tanbreeze is supposed to be one of the biggest deposits in the world, right?
One of the largest, yes. And critically, it's rich in the heavy rare earths dysprosium, terbium, the ones you need for high-performance magnets in EVs and defense tech.
I also saw a note in the analysis about radioactivity levels.
Yes, and that's a key differentiator. A lot of these deposits are stuck with high levels of uranium and thorium, which creates a regulatory and shipping nightmare. Tanbreeze is relatively clean.
Which makes shipping it to Saudi Arabia actually feasible.
Feasible, exactly. And the tying of all this feels... well, it feels very coordinated. You've got the pilot plant approval, you have the Saudi deal, and then in the background, there's all this chatter about a big framework deal between the U.S. and Greenland.
Geopolitical tailwind.
It's undeniable. Washington wants a non-China supply chain. Greenland has the asset, and Saudi Arabia has the capital. It looks like a perfect geopolitical play.
It looks perfect on a PowerPoint slide anyway.
Yeah.
But now we have to look at the checkbook. This is where the deep dive gets a little uncomfortable.
Yeah.
We're talking about a company with a market cap over $2 billion. The stock has doubled this year. But you look at the financials in this report, and the cupboard is bare.
It's worse than bare. It's a potential liquidity crisis. The analysis points to a current ratio of about 0.13.
0.13? For anyone listening who isn't an accountant, that is really bad. It means for every dollar you owe in the short term, you only have 13 cents in assets to pay for it.
It's a massive red flag. and the reported cash on hand is only around $7 million.
$7 million. You can't even build a shed in the Arctic for $7 million, let alone a pilot plant and a refinery.
You can barely keep the lights on for $7 million, and that is the huge disconnect here. The market is valuing the story at $2 billion, but the reality is the company needs hundreds of millions of dollars just to get started.
So, where does that money come from? They have no revenue.
Well, there are only two real options: debt or equity. Debt is going to be incredibly expensive for a company in their position, so that leaves equity.
A secondary offering. Selling more shares.
Almost certainly, and that's the whole bear case. It's why a firm like Weiss Ratings still has a sell on the stock despite all the hype. They know a huge capital raise is coming.
Which will dilute the current shareholders.
Exactly. If you bought the stock at $18 on Thursday, and next week they announce they're selling a huge block of new shares at, say, $14 to raise cash, your position gets hit immediately.
It's the classic junior miner cycle, isn't it? Spike on the news, then bleed on the financing.
It is. The bulls are just betting that the story is so good, the geopolitical need so great, that big institutions will step in and fund it without completely crushing the stock price. But that's a huge gamble.
It really feels like the market is treating CRML like a tech stock. You know, pricing in growth a decade from now and just ignoring the physics of moving rocks and the reality of burning cash today.
That's a great way to put it. There's a scarcity premium being paid, not just for the metals, but for one of the only Western companies that actually has a credible plan to bypass China. Investors are desperate for that story.
But gravity usually wins in the end. Let's talk about the chart itself. It went vertical, parabolic. We hit that resistance right around $20. Is that a hard ceiling?
Well, 20 is a big psychological number, but technically speaking, the RSI, the Relative Strength Index, is screaming overbought.
So it moved too far too fast.
Way too fast. You create all this empty space, this air underneath the price. There's no real support built up. All the traders who bought the breakout at $15 or $16 are sitting on huge gains, and they're going to be looking to take profits.
And the analysis we're looking at suggests a pullback is probably healthy here, maybe back to that $16 range.
I think so. The 1550 level, which used to be resistance, should now become the new floor, the new support. If the stock can hold that level, it's a very bullish sign. If it breaks back below that,
then the whole thing might have just been a short squeeze.
Could be. I mean, if you were shorting the stock based on that terrible balance sheet, Thursday was your worst nightmare. You were forced to buy back your shares to cover, which just pushed the price even higher.
Feedback loop.
Classic squeeze. And once that buying pressure is gone, the stock can drift right back down to reality.
Okay, so to sum it all up for you listening, we have a company that has perfectly positioned itself at the center of this global geopolitical fight. It has the rocks in Greenland, a potential partner with deep pockets in Saudi Arabia.
But it has the bank account of a small startup, not a global industrial giant.
The margin for error here is basically zero, right?
Absolutely zero. When you are priced for perfection like this, any little hiccup, a permitting delay, a bad drill result, that Saudi deal falling through, could send the stock tumbling.
It just highlights this huge shift in how the market values these strategic companies. 5 years ago, a pre-revenue miner with $7 million in cash would never, ever have a $2 billion valuation. I don't care how good their story was.
We're in a new world of sort of national security investing. The market is saying that the security of your supply chain is worth a massive premium over old school metrics like book value.
Which brings me to a final thought, something for you to chew on. Spend all this time looking at balance sheets, cash flow, PE ratios, the traditional stuff.
As we should.
Of course. But looking at a stock like CRML, you have to ask, in a world where these critical metals are the new oil, where supply chains are being used as weapons, does the market care more about dirt moving and geopolitical alliances than it does about solvency? Is the strategic value of these resources now so high that it completely overwhelms the financial reality of the companies that own them?
It's a question of time horizons, I think. The balance sheet tells you about the next year. The strategic alliance tells you about the next decade. And all this volatility we're seeing, it's just investors fighting to figure out which timeline matters more.
And on Thursday, that fight was explosive. We'll be watching for that secondary offering announcement. Until then, do your own homework and be careful out there.
Thanks for joining us.
Don't forget to like, share, and subscribe for more.